Hi, I'm Gavin Correa, Managing Partner at LCA, host of the free accounting clinic for entrepreneurs at Yes. As is customary, every new year ushers in new rules, new income tax rates, and new payroll tax rates. What usually stays the same are the various deadlines for filing government forms, so we must be careful not to miss deadlines, as certain deadlines can carry interest and dreaded penalties. In this video, I'm going to share with you some tips and best practices. So hang on, here we go. Payroll taxes or deductions at source are usually due on the 15th of the following month after payroll has been paid to employees. Your business has employees and is responsible for deducting the employees' taxes and remitting the taxes to the government. There are various payroll software programs and services that can help you in the calculations. We start with the employees' gross wages, calculate their net, and remit the balance to the governments. Sales taxes, GST, and QST are usually due on the last day of the following month of your filing period. Your filing period may be monthly or annually, or more likely it is quarterly. Therefore, if your GST reporting quarter ends on March 31st, then your GST report is due on April 30th. The GST rate is 5% and the QST rate is just under 10%. If you are registered for GST and QST, then you must charge your customers the sales taxes and you must remit these taxes to the government. Any taxes you have paid out will be a credit to you to net against the amounts you collected, and then you remit the balance. The list of annual deadlines are as follows. January 15th is the payment deadline for taxable benefits for the prior payroll year to be added to payroll remittances, namely auto benefits, low interest loan benefits, and all such taxable benefits. These amounts are added to the employee's gross income and will ensure that you pay the required payroll deductions. Taxable benefit calculations are generally a quantification of a perk allowed to an employee as a result of their employment status. This also applies to shareholders who receive such benefits. January 31st is the payment deadline for filing your sales tax remittances for the period ended December 31st. You must remit the sales taxes, the GST, the HST, and the QST on any of the above noted taxable benefits, which most commonly are auto benefits. February 28th is the filing deadline for payroll for prior year T4 summaries and Releve 1 summaries. This is the annual summary of all the payroll taxes remitted. On an annual basis, you must balance the payroll taxes remitted and generate T4 and Releve 1 slips for each of your employees. The employees use these slips to declare on their personal income tax returns. It is the link of payroll taxes remitted by an employer and how an employee declares their income and corresponding deductions. February 28th is a deadline for T5s for payment of interest or corporate dividends paid in the prior year. If you are the owner of a company and choose to pay yourself and other shareholders a dividend instead of a salary for tax or other reasons, then you must declare these amounts to the government. This is the link from company to the individual that ensures that all the dividends paid corporately are declared individually. February 28th is also the payment deadline for income taxes for corporations with December year ends. All corporations have 60 days from their year ends to pay their income taxes. Yes, companies do pay income taxes. They still have a total of 6 months to file their tax returns. March 1st is the deadline for RRSP contributions for the current taxation year. An individual still has 60 days to contribute to the RRSPs for the prior year. It gives you that time to calculate your income taxes owing and then save some income taxes, perhaps by making an RRSP contribution. March 31st is the filing deadline for trust returns and partnership returns. If you are a beneficiary of a trust or mutual fund investment, this is an important deadline. April 30th is the filing deadline for all Canadian personal income tax returns if you owe income taxes. So please ensure you have all your papers organized and ready. Also, see your accountant or check out the various software programs available online. Give yourself or your accountant plenty of time for gathering missing information in order to meet the deadline. If you do not file on time and you owe income taxes, then you will be penalized a late filing fee. If you have a refund coming, no worries, no penalties, but they will not give you any interest either. But the best rule of thumb is to file on time. Also, June 15th is the filing deadline for Canadian personal income tax returns for individuals with business income. The good news is that whenever a deadline falls on a weekend or statutory holiday, the deadline is pushed to the next business day. Note that filing deadlines usually require that the forms are filed on time, meaning postmarked or sent electronically. It is important to note that payment deadlines for payroll and sales taxes require that the government actually receive the funds by the deadline. Finally, visit yesmontreal.ca for useful tip sheets on these topics and valuable additional resources. I'd also recommend booking an appointment with the experienced business coaches at Yes.